Hello, hi. Welcome to McBoss Capital channel. My name is Michael Chu. You can reach us at support@mcbosscapital.com. Today, we're gonna talk about what to look for in the market correction. Just a quick disclaimer: all materials shown here are for informational purpose only. They are not recommendations or investment advice. So, as I always focus on sharpening my skills, there are four things I'm looking at, right? What to buy, when to hold, and when to sell. Right now, obviously, market has lots of turbulence, and this is based on the week December 3rd, ending December 3rd. And if you have cash right now, you're asking yourself, should I buy into this market? And if you are holding mostly equity stocks, you might say, well, my portfolio continued to drop. Should I be selling, right? So those are things that we should be thinking about at this moment, and we're going to go through some information and see whether they make sense to you. So a few things that I want to touch on today: what to look for in a market correction. First, we need to understand, what's happening in the marketplace, right? Why are we seeing turbulence, right? Understand the macro news, because generally market doesn't go into correction until there's something bigger fundamentally that is affecting the market. We're going to talk about a little bit about psychology as well, of the market. What does the market breadth look like? Are we seeing stocks, climbing above the 10 days moving average, or are they continue to trend downward, right? Look for stocks with high relative strength. Are they outperforming the S&P 500 right now? And then finally, you want to understand, like, are the stocks that are doing well, are they growth stocks, are they cyclical stocks, or are they defensive stocks? We're going to jump to the charts right now on the index. So this is NASDAQ, and just kind of want to touch back on what happened in the last year or two, right? Especially since the pandemic. So we have this pandemic correction. It's a very steep correction. As you can see here, it gapped down on this week. This is a weekly chart, and then it also gapped down above this. First it was 50-day, the red line. Then the black line was just the 200-day, and then it did bounce back by the So it was a very short correction. It was 5 weeks, but it was severe. I think it might be close to 30%. And for some stocks, it might correct a lot more than just 30%. And we are starting to see a little bit of that happening here currently, right? The only difference is, which is quite interesting, is the fact that here we see 30% correction in the index. Here we are seeing a very small pullback. You might not even call it correction yet, because technical correction are usually 10% or lower, but we're not quite there yet. I believe this is probably closer to 7 or 8%. But when we look at stocks, some of the stocks, they're actually correcting a lot more than this, and so that internally it looks like a bear market, right? And the only reason why the index is not dropping as much is because especially in NASDAQ, some of the FANG stocks are doing well. If we look at S&P, very similar. It hasn't dropped as much, and then some of the large caps also are still holding on, right? But many stocks are actually have fallen more than 10% for sure. Most likely some of them even 20 or more. So so the question is, what's happening here, right? So we have this pandemic. Everyone thought, oh, okay, the world shut down, businesses are shut down, consumers are scared to go out, and really, people, the economy kind of basically slowed down big time. People weren't going to work and stuff like that. And then, what happened was the market actually recovered since then, right? Very quickly. And the main reason was, and we saw a lot of the tech stocks, and then eventually we saw some of the, even the travel stocks and stuff start to recover, because what happened here was it was a huge correction for some stocks, right? So I don't want to go into too much details in terms of just because of time, but you can go back and look at many stocks during that pandemic correction. So for, like I said, the index correct 30%, but many stocks correct more than 30%, right? So like it could be 50, 60% even, or more. So, because of such a severe correction, and I just want to, compare that to currently, even though you don't see it on the index chart, but you are seeing in many stocks, right? And so they're correcting big time as well right now. And so that, so it mimics kind of what happened in the past, is what I'm trying to get at. And so even though the index hasn't corrected that much, but behind the scene, the stocks are correcting a lot. So what I'm trying to say is, they may be getting oversold soon, is what I'm trying to get at. And there's other stuff that we want to look at, that might hint at that, right? So let me just come back to my notes here, because I do want to cover all this. So understanding the macro news. So what's happening in the macro news? So there was a really nice article that just came out today on December 5th. So, and market history, says Omicron volatility isn't a reason for investors to sell. Now, and the most important thing here that one of the analysts were talking about is this chart right here. S&P 500 returns following wick spike. So we look at the wicks, right? So this happened recently, actually November 26th. And if I just want to show you quickly on the chart here, what happened. If I come back to my chart, it's a little bit messy, but anyhow, I'll guide you through it. On the markup here, on the NASDAQ chart, I just mark it up there. So just watch on this right side here, right? So November 26th is actually right here. Okay, so it has started to go down, and right here. Okay, so this was a Friday, and it was a big drop below the 21-day, the pink line here. And what happened that day was World Health Organization announced Omicron, right? They named the variant that is deemed concern to the world, the public health, and they're monitoring that Omicron right now. And so that day was, a huge drop, and even though it doesn't look significant here, like, it wasn't like a big 5% correction on the index, which is usually you don't see that. But if I look at the wicks here, jump back to the wicks for a second, and November 26th was right here, right? So the day before, and you can see it here, the day before we are just at the moving average. You can see all the moving averages converging right now. And then when that news was announced that day, this is what happened. It's a huge jump from here to here. So what this article is talking about is how they took the last 30 years and they look at where the most change in percentage. So in this case, November 26 was the fourth largest spike in the wicks, over 40%, but here it says 54%. And when they studied the history in the last 30 years, what happened was, you see, you have your 1 month later. So what happens 1 month later? What happens 3 months later? And they look at S&P 500. And 19 out of 20 times, or 18 out of 19 times, it says here, is actually a gain. So 1 year later, so if you took advantage and after that day you bought, what happens, 12 months later? You can see, right, 18 out of 19 times, they return, most of them double-digit gains, right? Except for one scenario here, which was 07, right? This was before the Great Recession, like 1 year before that. But every other scenario, it has turned out positive. So, and even if you look at 1 month, so there's a few red here, right? So not all of them turn positive in the month. So I'm not saying, the turbulence is ending right now, but it's possible, 1 month from now, it could still be, it still could be continue to go down. But if you look long term, it's actually quite beneficial, right? Like, when you look at this stat. So that's just something I want to point out right now. So coming back to the chart, just to finish off the macro news here, right? Because it's important to see why those days drop. So you can see the index start dropping. So the second big down day was Powell, the Federal Reserve Powell taper sooner than most people thought, and they also dropped the transitory term and called inflation no longer transitory. So that was the second day here drop. So that was a huge indicator that the market were to go downward, because now you have two big macro news, right? You have inflation that is no longer transitory, and you have the Omicron, right? And so now you kind of have to push forward next 6 months. What's going to happen to the economy with these two big macro news lingering around? And then December 1st, obviously, the market did not like the news that, Omicron has now been detected in the US. So that was another big day drop. And then as recent as Friday, the December 3rd, they missed the job numbers by almost 300,000 jobs. Again, that also, again, is showing the economy is not as strong as people have hoped, right? And so now we're starting to see a lot of macro news that are deemed not as good as people have, well, first of all, there's a few that is surprising, right? And then there's, there's actual numbers that show that, hey, November job report wasn't that good. So we can, as an investor or trader, we can, predict the future. There could be a lot more bad news come out. And one of them could be Omicron news, that the vaccine doesn't protect you from Omicron, right? And then the second question might be, if it doesn't protect you, well, how severe is this virus, right? If you call it. So those are questions that no one could answer. But right now, the market is taking that into account right now, right? And there may be more bad news coming out. Who knows, right? But the article talk about the wicks, which I just showed you. And if we go back to the wicks, there's actually, so that was the November 26th. And then, December 1st, it jumped higher, right? So that was, another big jump. And then Friday, it hit another new high, right? So you can see here, there's three jumps. And if you look back even, the last, you can see all these spikes here, right? They typically are only, there's nowhere near here on this year, 2021, where you could see those three jumps as much. Like there's something similar here. But, we're seeing progressive jump here in the wicks, right? Which is the volatility. In order to see more than that, let's go back another year. So go back to 2020. And you can see here, there's nothing like that after the pandemic. And here's where the pandemic happened. And it jumped, progressive. Here's the jump one, and then here's another jump, and then here's another jump. So there's like three big jumps, right, over a period of time, right? And then eventually it hit a, this is very high, like, in terms of where it is, 85, it's pretty high. But, when you look at the relative jump, that's where, we saw, this is one high here, another high here, and then another high here. So we're seeing similar projection, and not saying that this could end right now. There might be, most likely another week of selling or two. But, we are getting closer to, where the possible bottom might be. Next, I want to talk about the psychology of the market. So I'm going to go to mcbosscapital.com and search for the latest, one of the latest articles here. And so every week I do kind of a post summary of what happened and, what should we pay attention to. So right now, this headline, weak job numbers send the stock market tumbling, right, on Friday. That was the news then, and again, I mentioned here, there's a lot of analysts that are still bullish. They mentioned buying the dip, and but obviously, if you're thinking long term, for sure, it's a good chance to buy on the dip when so many stocks are on sale right now. But in terms of short term, it could go much further down. No one really knows, right? But like I said, a lot of stocks are already in bear market territory. There's still lots of macro issues and stuff. But what I want to show you here is the psychology of the market is that when things look the worst, especially when it's been dropping, like, I think like almost for some of the index it might be like close to 4 weeks now. So that could, mean that people are starting to give up, right? And when people tend to give up, that's usually when it bottoms. So Nasdaq only have, probably Nasdaq was the one of the strongest index heading into this. I still want to call it correction because a lot of stocks are in correction. But S&P, you can see, it's 2 consecutive weeks down. Dow Industrials, you see that's the 4 weeks down right there. And we look at the small caps, Russell 2000, and you can see clearly this is probably the most visible chart, and it's the weakest one of all. And small caps are getting hurt real bad right now. And so it's very close to undercutting this really long base here, consolidation, and I'm not sure if it will, but it's getting close, right? 2107, this is 2159. So look, I think this would give you a really strong sign as to what would happen to the market once, if it get tested, right? So when it get tested, let's say it does fall below 2107, will it rebound from there? That will be a very important sign. Or is that just gonna, where people are just gonna panic sell and cause this to drop even further? Like, I don't know, it could go all the way to 2000, who knows, right? But my point is, watch for that signal, what's gonna happen down there when it does happen. So in terms of the market breadth, what I noted here, down here, is that we see that there was only 96 stocks being accumulated in that week, and 834 stocks being distributed. So there's way more selling than buying, right? And that's not a good sign because no one's buying. So until we see this turn around, it's probably best not to put money to work right now, just because we have no idea how far it will go. And also the number of industry groups being accumulated based on those stocks are like 12 groups versus 133 groups being distributed. So that's a very significant number, right? Right now what we want to see is some stabilization, and I have a sense that that might not come so soon, just because all those macro news are still gonna linger around. People are still wondering what will happen with inflation. People are still wondering what will happen to Omicron. Until we get some sort of clarity, and whether the economy is still strong, like I said, a lot of analysts think things are still good. You don't have to worry, but no one knows the future, right? Like that's the biggest thing. So again, but we are near, like I said, as you see from the wicks, we are near some sort of close. I wouldn't say for sure, but it's pretty close to a bottom soon. So there might still be a chance for Santander rally in the later half of this month. But like I said, right now it's December 5th. It still might have a way to go. So right now, I just want to quickly talk about what are we looking for. Yes, there's all this macro news. There's the psychology of the market. There's market breadth, that we know is very weak right now. But what actually should we be looking for, if we think that there's potential to buy? One of the signal I always look for is the stock that I'm looking at, and I try to look at as many stocks as possible so that I can understand whether the market has turned around, not just one specific stock. So when you look at stocks, are they starting to come up above their 10 days moving average, right? Are they performing stronger than the S&P 500, right? When that do happen. And what kind of stocks are there? Like, are they growth stocks, cyclical stocks, or are they defensive stocks? Because that tells you whether the turnaround might have some leg or not, right? I'm not going to look at too many stocks today, just because many stocks are still in correction mode. But Nvidia is one that really sticks out to me right now. It has done really well, right? It's one of the darling stocks. It has climbed a lot this year, 2021, and even from the most recent consolidation, and it broke out, and you see how it always stays above the green line, which is the 10 days moving average. Here it did, it fell below it, but then it, the next day it actually jumped up, gap up, right? Then eventually it paused again, and now it falls back to the green line again. And recently, only in the last few days, right, that it fell below it. It tried to stay above it, but you can see on Friday it also fell again, and it fall back to the pink line, which is 21 days. Now this chart looks a lot better than many charts out there, just because it hasn't corrected a lot, right? So from this peak to here, it has corrected, if I look at the percent here, 11%, whereas like I say, many stocks are down 20 or more percent. And now it's sitting at this 21-day moving average. So for me to get into this stock again, I tend to buy, I like to see some consolidation here, and it might take another week or two to build to, maybe hopefully it'll go sideways. But if it does go down, even as far as this 50-day line right here, which is the red line, those are, good signs, to look for. But when it bounces back up, like I said, right now the 10-day is way too far above the 50-day, just because of how strong this stock has performed, right? It's really far from there. Like, I don't expect this to fall to 50-day, right? But if it does bounce back above 10-day, and again, it has tested this many times now, but it did fail recently. So when it bounced back, not saying it will climb from there, it might come back and test it again, but it just gives you a sign that, hey, maybe there's a turnaround here, right? And there might be an opportunity there. Okay, so look for that. And Nvidia is obviously a chip stock, and belong to the growth category. If you look at the earnings right now, it has grown significantly this last 2 years, right? And you can see the sales are all double-digit gains. So really strong growth stock. So this definitely belongs to the growth stock category. This is probably one of the best growth stock, in terms of how the chart looked, right? If we compare this to, say, I don't know, the worst one that happened on Friday was Docusign, and it just crashed, right? And this has great numbers too, and that's why this stock has performed really well during the pandemic. And recently it consolidated a lot, and it just couldn't go higher, and eventually it just broke down. Now, hopefully you weren't in a stock like this, because there's really no signs here that tell you. If we look at the daily chart, right, it's constantly battling the 10-day moving average, right? So another thing you want to make sure is, you see how even though here it comes back above the 10-day and it fell right here, right? That's a sign that something's not working. And then it fell second time right here. So even though it climbed back above, it fell again. So there's a lot of selling happening, and each time it comes back to 10-day, it just fails again, right? So it never gave you a chance to, really take control of, whether it can continue to move. So, so right now it's definitely below the 10-day, right? And many charts are looking like that. There's many charts, right? So, at some point in time, when the market turns around, it will bounce above the 10-day. And when it bounces above the 10-day, like I say, don't just look at this stock. Look at many stocks and see, are almost every stock doing that, right? The other thing you want to look at is relative performance. And most tools have something called relative strength. And this one, you can see the relative strength here. This is actually the relative strength line, the blue line. And it should always be, when you buy it, it should be moving in an uptrend. Because what that tells you is that it is doing better than S&P 500. So you can see this one just keep going down, right? So if I go back to Nvidia, look at this chart, right? You see, yes, it did drop. Obviously, it doesn't go straight up. It dropped, but then it moved up, right? It dropped a little bit, and then it moves up, right? Now it drops, right? Again. So the question is it going to move up again, right? So this is an uptrend, right? This is an uptrend because it constantly makes new highs, right? Whereas DocuSign, you constantly see the opposite, which is it constantly it's not making new highs. So that's what relative strength can help you understand better. Like even if DocuSign turned around, you wouldn't buy that stock because the relative strength are weak, right? Because it's not doing as well as Nvidia is. So that's just a way to understand what to do. In the market correction, you want to look for stocks that looks like this, and then be able to compare it to other type of stocks too. So anyhow, I just want to give this brief today, just to help guide those people who feel lost right now in this correction and what to do. So of course, there's no one solution for every portfolio that out there. So depending where you're at, like I said, if you have cash, I wouldn't deploy that right now just because there could be another week or two of heavy selling. We need to see some clarity into the macro news right now. There's too much uncertainty. And who knows, right? Like, there might be more bad news coming out that we don't even know what it is yet. So I continue to monitor that. As you can see my markup here, I want to see what those big moves, down moves mean. What is the news that triggered that? And you can see each news here are news. They're not old news. They're new news, right? So it could be more bad news coming out that no one actually know about, and the market will react negatively to that until there's more clarity. That there's more cases of Omicron. Well, now we already know there's cases of Omicron, so that's not new news. But what is it about Omicron that we don't know yet? Maybe how effective it is against vaccine, or how severe the illness might be, right? So those are things that I need to see clarity before I would, deploy more cash to the portfolio to see, like I said. Then the other thing is, even with all the macro news, like not new news anymore, I would now think about, well, which stocks are showing high relative strength, performing better than others. That's kind of like the very important thing. And then how many stocks are doing that, not just a few stocks, right? Like I need to see many stocks doing that. And usually the market do move in sync. Most of the stocks do move in sync with the market. So let's see what happens. So probably won't be doing another video for another couple of weeks, near Christmas time. Hopefully things would turn around by then, but if there's any huge development, I might do another video before that. Thank you all for watching. If you haven't subscribed to this video, please do. If you like it, give it a thumbs up. You can always reach me at this email here. Late to hear from you what you think. Thank you very much.